a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about value ETFs. And we know that growth stocks had done very well over the past decade. In fact, major growth indexes had outperformed value index by almost 8% annually on an average since the start of the financial crisis, and that is since 2008, in fact. And that is mainly due to superb performance by mega cap technology stocks. Those stocks did so well that growth indexes had a superb performance. But if we look at the longer term, much longer term performance, then value stocks with low price to book, price to sales, and price to earnings ratios, they had outperformed over the longer term. Now, over the past few months, value stocks have again started coming back because these tend to do better, hold up better in a rising rate and high inflation environment. And if we look at the past 1 year, then value index has outperformed the growth index by about 6.5%. And many value stocks, which are in traditional defensive areas, including consumer companies, healthcare, finance too, they are dividend-paying stocks, and they tend to do better in the current environment. And because investors focus so much on dividend-paying stocks, so that is another reason why these companies have been doing well. Now, let's take a look at 3 value ETFs, which are very different kinds because they use different metrics to select and weight value stocks. But most ETFs, they have a lot of focus on value stocks with those 3 attractive ratios, value stocks which are attractively priced on the basis of PE, PB, and price to sales. So the first one I'm highlighting is the most popular and also one of the cheapest value ETFs, the Vanguard Value ETF with the ticker symbol VTV. It tracks the CRSP US Large Cap Value Index, uses various factors to select and weight stocks. And as I said, this is one of the cheapest with just 4 basis points expense ratio. Very popular with over 100 billion in assets. To learn more about this ETF, please go to the Zacks quote page on Zacks.com. Nice dividend yield of 2.3%. I also own this ETF in the ETF investor portfolio that I manage, and then you can use this link to go to the external quote page, the Vanguard webpage for the ETF. You can read their research. They have some research on value stocks and why they can continue to outperform. And then you can also look at the portfolio, what it holds. So it has about 349 stocks with attractive PE and P price to book ratios. If you look at the holdings, Warren Buffett's Berkshire Hathaway is the largest holding. Then you see United Health Group, Johnson & Johnson, Procter & Gamble. Now, the second one I'm highlighting is by Invesco. The ticker symbol is RPV. This is Invesco S&P 500 Pure Value ETF. So according to this methodology, this focuses on stocks within the S&P 500 which have the purest value characteristics. So this methodology divides S&P 500 into 3 buckets with no overlap, and 1/3 of the stocks with high value scores are classified as pure value, and 1/3 with highest growth scores are classified as pure growth. Follows a value weighting scheme, slightly more expensive because of this specialized selection and weighting methodology, but this is also very popular with almost 4 billion in assets. Again, you can go to the code page on Zacks.com, read our research report. Articles, dividend yield is about 1.64%, and you can go to Invesco web page for this ETF, and this describes the methodology about using these style scores for value and growth, price to value, earnings to price, and sales to price, and how it selects and weights stocks. If you look at the portfolio, Berkshire Hathaway again is the top holding in the ETF. Then you see Marathon Petroleum, Valero Energy, Cigna, and other stocks. The third one I'm highlighting is again slightly different from the other two. Alpha Architect US Quantitative Value ETF, ticker symbol QVAL. This is an actively managed ETF that follows an equal weighting methodology, and it tends to look for the cheapest and highest quality value stocks. So again, to learn more, you can go to the code page on Zacks.com. 49 basis points expense ratio, dividend yield is 1.2%. You can go to the external homepage, Alpha Architect web page for this ETF, and you can read about what it intends to do, and you will see holdings are slightly different from the other two. Olin Corporation, Western Digital, and Magnolia Oil and Gas, Matador, HP Inc. These are the top holdings in this ETF. On the next slide, I have the comparative performance over the past 1 year versus the S&P 500 index. You will see that all three have outperformed the S&P 500 index, though the three don't have a lot of difference in performance, but still the Alpha Architect product QVAL has done best, or are up between 5 to 7%, and S&P 500 index is almost flat after all the recent gyrations. On the second slide, I have the year-to-date performance of these ETFs, and you will see that the Invesco product has done best, up about 4%. The other two are down just about 2%, whereas the S&P 500 index is down almost 14% year-to-date. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and I'll see you next week.